Alright, so I'm looking at OPTT on October 6th, and basically it's more or less a direct result from old news, and no new news came out, but the stock kept rising because basically support never, I shouldn't say never, but it didn't fall much lower than the previous support. Um, they're a good company. They released relatively good news. It's hard to it's hard to tell whether uh, like they issued new shares or the 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 company that they made a deal with is buying like shares that currently exist. But either way, I think private like placements or not private placements, but like private selling of shares is generally a good thing because they're not selling it to the public; they're selling it to this company called Aspire Capital Fund. And this was on September 18th, 2020. September, really? Yeah, September 18th, 2020. I had to like ask myself. Yeah, so ever since that day, support basically never fell. It fell like once, but after that, just rose, 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 rose. I mean, it rose mostly in like 3 days, but like it basically never dropped. It didn't drop too much. Um, so that was awesome. Uh, like I mean, it would have showed up on people's radar probably on this day and this after hours and pre-market. So again, it's reminding me that rising support is a very important thing. These are the trades that I would have done on this. I would have like I won't I shouldn't say these are the trades I would have done on. I think these are the best trades that you could have done, and I'm gonna try to rationalize them. Like so, I'm gonna work backwards to why these are the best trades. So if you had bought here and you had sold here, that's the best thing you do. Here and here, bought here and sold here, bought here and sold here. Actually, it's more like this. But then again, actually, it's not. That's not true. So this is lower than that. But that's like pretty risky. But anyways, that's what it is. Okay, so let's rationalize here. We'll go through each thing. So why would you have bought over here? Okay, number one for super trend, and that's just like SMA. So SMA is, well, actually, let me just go over here. This is better to work with. So number one is like, I'm gonna like try to be simple because maybe not everyone has my indicators. Uh, so the EMAs are constantly in a uptrend. So that's a good reason to buy. Like you just like, you see a stock is uptrending, you buy it. Like literally almost the entire time from here to here, as it's expanding, so it keeps expanding. You buy here, you sell here, buy here, sell here. No, that's not that good. But like this one was really good. This one is really good. Any of these, as support rises, um, the EMAs will keep expanding with each other in a good way. Um, yeah. So the EMAs would have told you. So as they're expanding, it may be a good time to get in, most likely. The second thing is MACD. So why would we have bought here? Um, I guess you know what. I want to go back to that EMAs. Like the EMAs are still, uh, they're still, they're in an uptrend, but they're still relatively tight. They have yet to do an explosion like this. So see how it exploded? It went big. You could have sold it there, and then when it gets tight again, you could have bought again. So tight here, big here, uh, tighter here, and then maybe bigger over there. We don't know. Let's continue. So EMAs are telling you that it could have a big explosion. For me, I would have looked at the super trend indicator that I made, and I would have tried to get in like over here. I would have tried to get in over here. I would have tried to get in over here, because this is where like all the explosions happen. So here, here. Uh, so that's a good reminder for myself. I never thought of the price I would give these indicators, but like I mean, this one's an amazing idea. I don't know if I'd sell it, but like, I mean, like I would sell it, but I just don't know what price I would give. Because I did put like my sweat and tears into this shit. Anyways, that's not why I'm analyzing the stock. So let's continue to analyze the stock. Makes me think though. Anyways, okay, MACD. So MACD. Why would I have bought here? Well, what happened? What just happened? Oh, I know what happened. I think I deleted the price. Oh no, I didn't delete the price. I just like moved it. Ugh. It's annoying. Move to new pane above. No, existing pane above. There you go. So MACD was it negative over here? No, it wasn't negative, but here's a really good point. When you have a uptrending stock and then MACD goes up and down and up and down and up and down, but it's still above zero, while it's going down, that's a good time to buy in general for an uptrending stock. Okay? That's exactly exhibited here. Next thing I would think about is price weighted volume. So price and volume. So price is decreasing, volume is increasing. Probably want to buy on the largest green volume, except it doesn't actually show here. Okay, one thing, so it's positive, and then it says to sell. It's telling me to sell here. So then I would have tried to buy over here at 945, according to price weighted volume. Or actually, that's not true. So what I like to do with price weighted volume, and I just mean that like I want to see volume growing. Like if you don't have my indicator, so you would look at volume and you look at price. So so price is falling, so we're not interested in buying. Then as soon as the price starts to rise, and even though it went down here, it had I think it had why was it green? I think probably because the open was less than the close. I'm guessing that's why that happened. I'm not quite sure, but I'm guessing that's the reason. So, no. The close was this close was less than this close. Yeah, you can tell by the opening of this. Interesting, eh? Yeah, I'm pretty sure. Okay, so anyways, instead of trying to guess, I just know that this is green because the close of this is greater than the close of this. So I probably would have tried to get in over here, or here, because I want to see continually increasing price and volume. And then you can see that volume is definitely increasing over here. Maybe that would have given me a bigger clue to buy in here. That's why you see more buyers, because price is steadily increasing, volume is steadily increasing, and these are very good signs of an uptrend. So if I had even waited and I had bought in here, like I still would have seen an increase in volume, and I would have tried to sell right here because it's going below the average, and that's when it's usually a good time to sell. What else? Another reason I would have bought there. So another reason I would have bought there, I honestly wouldn't have bought here using this indicator. I would have tried to buy right here. A lot of things are telling me to buy like somewhere in between here and here, because I know it's in an uptrend. Here, I'm not so sure. Like if we just look at this, it does look like the uptrend is over and it's a falling stock. This is more a risky area, and you know what? It's true. You know, that's very true. The riskiest areas tend to be, not always, they tend to be some of the best buy and sell areas, For example, a stock drops like, let's say 100% or 50%. That's horrible, right? You wouldn't want to invest in that, but that is probably the riskiest place where you have like a massive drop. And I've done this before, massive dip. What is it called? Other than massive dip, is there a name for it? I'm trying to think. I forget, but I think there is another name. So when there's a huge dip, I've done this before, and it's kind of scary. You buy it, you buy the stock on like a horrible dip, and the reason that can work, the reason that can work, I can show you exactly why right here. So if your stock spikes up way too hard, people know that it's kind of oversold or overbought, and they will kind of have a sell-off or buy-in. So during a massive dip, sometimes I want to see like a massive dip, like here. There was a big dip from here. Oh, there actually no. This is kind of the same thing. Big dip from here to here, and then it ended up jumping up afterwards. So there is that. And then this is kind of like cumulative. This is like cumulative. So I feel like this is the least risky area, but you're going to make the most money in the more risky areas. Something to think about. I'm sure like maybe my viewers, which is like my friends on Discord, probably already know this, but me, I never thought too hard about that. So even during a strong sell zone, when the price is dropping, that can be an amazing time to buy, as long as the price starts to have some upward movement. So I would say this is the least risky area versus that. And what's the difference in price? So it's let's say a low of $1.37 versus a low of $1.55. And then you might be able to reap 2.22. So you're getting what kind of extra percentage in there? So if I were to do the math, so let's see, so times 1 point whatever. So it's just going to be 2.23 divided by this 1.58 minus 1. That'll give you 41%. So you'll make 41% from here to here versus 1.38, okay? So 2.23 was it? Is that what it was? 2.33, sorry. Divided by 1.38. Sorry, I'm not paying attention. So, wow, that's a huge difference. So if you take a risky approach, you make like nearly 70%, and the other one was like 40%. That's insane. Is that for real? Let me just do that again. 2.24 versus 1.56. Damn it! Did I mess up the numbers? Whatever, it doesn't matter. 2.24 divided by 1.56. 43%, and then 2.24 divided by 1.38. Was it 1.38? Yeah, it basically was. Okay, so it's not 78%. It's like 60% versus 40%. It's still a huge deal. Wow. 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 I guess this is the power of getting in a stock when it's low. So, geez, that is a huge difference. When you take less risk, you make less money sometimes. But there's more reliability that you're going to get that money back. Like, there's less reliability over here. And, yeah, that's what I have to say about that. Now, again, another thing actually that's not too bad is the RSI is easier to beat on a riskier buy than when RSI is on a less riskier buy. So like RSI was what was it? It was roughly 57 over here, and then RSI was 43 over here. And then one of the main goals, in my opinion, when you're day trading, is to beat the RSI. So you get in at like 50, you want to sell at 80. or whatever. And RSI was 80 over here. So 80 is really high, to be honest. And oh, look, you can see divergence. Like, if you didn't sell here, you just don't respect divergence and you don't care about it. But it would have been it would have been huge. Like, look how much the stock dropped from 2.234 to 1.93. That's a big drop. Yeah, so divergence, RSI divergence, huge. I think it's worth paying attention to. So I really like this concept. The fact that when you buy while it's low and RSI is low, it's easier to beat. The hard thing to do about this is like take a stock that's not in an uptrend, okay? So this one was kind of clearly an uptrend because like support is constantly rising. Like this is not normal, completely normal stock behavior. Like support can break, support can rise, support can break, it can go down. So I wouldn't say this is typical of all stocks. So I might have accepted just a higher buy-in price due to the fact that we don't know this stock's like perfectly. But considering the news was good and the support almost never broke, then you can take this kind of crap like as outlier and just assume that the support is never going to break. Even if it does break, like it usually goes up. So so the stock was in a downtrend. If you had bought while it's low, you'd profit. Stock was in a downtrend. If you had bought, okay, this is what I wanted to look at. So let's say stock is downtrending. Starts to uptrend a bit, falls. I mean, like, I wouldn't even want to get in this if it was downtrending and support was falling. So that's kind of odd. What about this? Let's look at this. Okay, so support is rising, okay? Support has risen. Now the stock starts to fall, okay? And then RSI is low over here at 1.07, and you have to beat 1.07. You see support around that area. So you buy in. It goes lower for a second, goes up, goes up, goes up, and you could have sold at this RSI. Could have beat it. Damn. I don't know, maybe this is a good stock. Okay, so that's something to keep in mind too. Buy in when the RSI is easy to beat. I was trying to think that look, for example, you can't buy in here when RSI is 40.56 and then wait, did I say 40.56? I meant, I want to use a different example. It's hard to use this example because there's a lot of good points. How about this? Okay, look, RSI is 52 over here. Damn, that's not gonna work either. I won't even look at this. I'm trying to explain the point that like you generally have to beat your RSI soon after you've made the purchase. So I think generally, like this is a good stock in the long term, but for a stock that's not good in the long term, what will happen is you can buy in over here when RSI, okay, finally I found the example. You can buy in over here when RSI is at 45, okay? And then RSI becomes 59. So obviously this is a good sale. This is a good trade, a long trade. But if you were to wait until it drops, and then it goes up, and then it drops again, let me continue the graph. So wait, you bought in at RSI's 47, and now RSI's 58 over here. I mean, technically you did make some money if you sold at 47 and 58. So I just think that this is more effective to use when you do it as soon as possible. So if you were to see that you bought in at 50 and then RSI goes to 64 or even 60, like you should be buying and selling during this period Because if you had just held, it would have done what you wanted to do twice. So you're number one, you're not getting the cumulative effect, because we always want the cumulative effect. So if the stock went like up and down a bit, up and down a bit, up and down a bit, and you didn't work with the volatility, or even like down a lot and then up more and then down a lot and then up more, if you didn't work with the volatility, you wouldn't have had this plus this plus this. You would have only had this to this. That's it. You would have had the net effect, and you're not even assured whether that's a like amazing thing or not. It happens with traders, like they'll get in a stock and then it'll go up and they're like, yeah, I'm in the money, and then it goes way down and they're like, you know what, I just want to sell it because I'm worried that it's going to go down further. And then it shoots up further, and then they're like, oh, damn, I wish I didn't sell. So this kind of behavior, it's why I think that you should be buying and selling not quickly, but when you're supposed to, and like soon after your criteria is satisfied for a sell, for taking profit. So my criteria for taking profit is RSI is greater than the purchase price RSI. So if RSI purchase price was 50, I want to sell at least 60 here. So it reaches 60, I sell it. Falls. And then how do I know whether I want to wait until 6? That's a new question. That's a good question. So how do I know whether I want to wait for an RSI of like 60 versus 80 or 80 versus 60? And the answer to that in this scenario is that is MACD falling or rising? Because if it's rising, then it's justified. I think it's justified to take a higher RSI. But in this case, it's falling. So big MACD swings and then lower and then lower. And then generally, not always, but generally when you have, I'm sure you guys have noticed this on other charts, when you have MACD slowly growing, it can lead to bigger growth. And if you have MACD slowly falling, what's the opposite of growing? Shrinking? Shrinking. If you have MACD shrinking, then it can lead to a downtrend, which happens here like pretty much temporarily. It does downtrend over here, from here to here. Yeah, so that is something to think about. Like, you want to beat your RSI, and you want to accept lower RSI when your MACD is falling as well, when your MACD resistance is shrinking. Because one, that creates divergence, and two, it will lead to a downtrend in general. So you want to get out as fast as possible. See, look, the time from here is actually becomes a lot longer, I think. So it goes from long to slightly long to short, shorter, and then just get out, basically, kind of. That's something to think about. This is just like a theory I just made up, and I think it's relatively valid. We'll look at other stocks and see if that's true or not. So, rate of change. Rate of change was negative over here, and this is like a more risky place to buy. Again, this is the less risky place to buy, and rate of change was positive over here. Okay, so this is really encouraging, the fact that let me look at rate of change for a second on that place to buy. So rate of change was made a new low over here at 555, goes up, goes down, and then I guess this is like an amazing place to buy. Oh yeah, this is where I marked off. This is the best place to buy. So it doesn't hit the bottom, and it just kind of keeps curving up. So it wants to be above zero, and unless you're already aware that when the rate of change crosses under or over zero, these are really strong buy and sell signals. So basically, since this is the best buy signal, or not the best buy signal, this is the best buy spot, and we know that rate of change is under 0, we can kind of come to the conclusion that you want to buy when rate of change is under 0 for a hot stock. Of course, you wouldn't want to buy it for like a stock that has, you know, lowering support, but for a hot stock with rising support, that's a good stock. You can totally buy when rate of change is negative, because you have faith that it's going to go positive again. And you know what's very interesting, that like rate of change is above 0 most of the time, and then less of the time it's under 0 and it's not even that bad. No, I shouldn't say it's not even that bad. It is bad. Like, that is a significant drop. Rate of change is making new lows. But the time it's in an uptrend and the time it's in a downtrend, I think they're both powerful. But like, the fact that it's in a longer uptrend, it keeps rising. So short, long, short, and then relatively long, and then short again, and then I wondered, did it go like for a long time? Yeah, it did. That's pretty cool. That's very cool. So that's something to keep in mind as well. So what is the pattern of rate of change? Like, and also be okay with buying when rate of change is negative. So if you were okay with buying rate of change is negative over here, you would have profited. But then, like, you really do have to, you do have to, so support wasn't rising over here. I think ideally you want to buy when, like, I don't know, I find that MACD is probably one of the best signals for a rising stock. So you would want to get in, like, around here. Especially, you know what, I didn't talk about this, but, like, you can see some clues that rate of change wants to go up. It'll, like, show some signs. So here you got one sign too. The rate of change wanted to go up. It like crossed for a bit and then it went down. So I don't know what you want to call that. I sometimes I heard like the concept of like cockroaches. Like if you see one cockroach, there's many. And then like if you see kind of like one spike up, there may be more spikes to come. Something to think about. Okay, so I've talked about it a lot on that one point, and surprisingly, I want to talk about more. So, what did my other indicator say? It said, yeah, this is a great place to buy. So this is a good indicator too. Basically, what it shows two things. It shows VWAP. I think the color said that this price was under the VWAP, and two, just within the bands, it's in the lower area of the bands. So like if you're using Bollinger bands or whatever, you want to buy when the price is located under 50%. That's generally a good buy price, because afterwards, you know, afterwards the price sticks to upper bands, and now the price is at 100% of the in the bands, like 100% height of the band location, the price location in the band location. Yeah. So it's sticking, and then like every one of these, you may feel a tad ripped off, because, not like a tad ripped off, but you're not getting the best deal ever. So you're getting a deal kind of thing when you're buying a stock before it really rises. So what does the momentum indicator say? It says buy over here, sell over here, and buy over here. Did it really support this point as a buy? No, it didn't. That's funny. I think this is more like, kind of, like whenever I look at this indicator, it's basically telling me that like, if there was a buy point and it just keeps rising, any point after that is a good buy. So any point after, any point after this, since the last signal was buy, would have been good to buy. Yeah, pretty much any of them. And then finally there's a sell signal over here because you see some resistance on MACD. So that gives you a good hint about how this is created. Okay, so escalator, slide overall trend. This is a very important trend for me because it's kind of Ichimoku related, and let's take a good look. So, this is funny. It's not funny, but it's very powerful. Buying in a downtrend when the price is below the clouds. Huge, man. That's so huge. Okay, I was just looking for something. So, yeah. So, very popular. I don't know, not popular, but like, yeah, it's like one of the best ways to use the Ichimoku clouds. Buy under the clouds, sell over the clouds. So, and then I find this is another very, very, very useful way to buy and sell. You want to buy when you found the, like, I would have preferred, like, if I was just basing this off Ichimoku clouds, I absolutely would not buy over here. And the reason that is because this is just the head. You're finding a head and the tail of a downtrend, right? As soon as the downtrend shows up. I wouldn't have wanted to buy here. I would have wanted to buy here. Even though it's above the clouds. Actually, when I see this sort of stuff, I usually wait for a bounce. So I would have probably waited, I would have tried to buy over here, or not even at all. I would have might have wanted to buy over here at 1.83 and then sell it over here at the 7. That sucks, because I wouldn't have gotten all of this. So I mean, it's something to consider. Maybe I'm using the clouds wrong, but like, buying under the, I know there's two things. I want to buy under the clouds, and I want to sell over the clouds. So buying under the clouds during a downtrend and selling over the clouds during an uptrend is one way to make some significant cash. Number two, I prefer to like buy at the head of the downtrend and like kind of the tail of an uptrend. So I like buying over here, this kind of area, because it tells me that this uptrend is going to continue. Okay. See, if you had done that over here, it would have been pretty profitable as well. And then if you had done that over here, let's see, like my head and tail concept, okay? So if you had bought in over here at 1.13, it would have dropped to 1.06 and would have rose to 1.110. So that's the head, that's the tail. But if we go by this kind of popular concept, it works much better, obviously. Buying under the clouds during a downtrend, so let's say you bought over here, 1.07, so you're still below the clouds. Then it goes above the clouds, and then it kind of, floats above the clouds. And let's say you sold at 1.33. So 1.33 versus 1.06, huge gains. That's a nice long trade. Oops. So that's something to think about. Oh, another thing to think about is parabolic stop and reverse. So these dots are they're by the same guy who created RSI, and it's called parabolic stop and reverse, or parabolic SAR. And basically, it's good to buy at the end of a downtrend. So I shouldn't say it's good to buy at the end of the downtrend. This kind of tells you should get ready to buy somewhere along these points. So buying over here is pretty good. And then this is a parabolic stop and reverse uptrend. So it goes uptrending, and then you want to sell sometime around here. And this is funny. Like, you can see volume and price divergence. Look how high volume is over here, 1.48. Or sorry, when the price is 2.23, volume is really high, and then volume is lower, but the price is higher. So there's some volume bearish divergence. That's so crazy. I find that so funny. So volume is another good indicator as well. Okay, so do I need to look at this any further? Yeah, because there's more indications. Okay, so you can see that I've labeled this as 1, and you can see that I've labeled this as 1, 2, 3, 4, 5, 6, 7. Now, ideally, you want to be buying at 1 and selling on 7. And I'm just saying that because I can see the best buy and sells. But if I actually use the indicator itself, so this indicator is one that I created, and basically it tells me that the bands, the lower bands have been hit once, and the upper bands have been hit 7 times. And these are like very strong sell signals. So you have 1 strong sell signal, 2 strong sell signal, 3 strong sell signal. And I've made this because basically at this point, it's no longer, the price location is no longer at 100% of the bands. It's above 100% of the bands. So if you're selling at any of these points, these are some like pretty sweet sells. Like you're gonna make some dough on these. Yeah, so what I normally do is I wouldn't have bought on the 1 according to this indicator that I created. I would have waited until the 1 is the last number, because you can see that, like, if you were just watching the stock and you saw that it went up 1, we don't know whether that's the last 1 or not. One thing that I like to do is I make a bet based on the numbers. So like, for example, you have 14 times here and you have 2 times here. And then I wait for a pause, and then and then I have like some J's here, and that tells me like use some judgment. So we're in an uptrend. The stock previously hit the uptrend 14 times, or sorry, the upper bands 14 times, hit 2 times. And I just compare the 2 numbers, and I'm like, what's bigger, 14 or 2? If the number 14 is bigger, I can tell that it's like the uptrend is really strong, and then while the downtrend is kind of low, there's a good chance that it's going to uptrend some more based on comparing those 2 numbers. So I buy in here at 1.36, and then I get this, boom. So now it's done 7, and then you have some judgment here, and then it goes up a bit, and then it falls down to 1. Okay, so now I'm comparing 1 versus 7, and then I wait for a pause, and then it's already hit 1. So basically it's telling me I waited too long and the uptrend is starting. So maybe I would have tried to get in on the 1 when this happens. I never really thought about this before, but another thing is the color. I've made the colors, sorry, there's just so many things to talk about on this. Is like I literally talked for 30 minutes about like the first buying point, but afterwards I'm not going to talk about it. I just want to like kind of, I don't know, go deep into this because I'm going to be using these kind of things. So when I see this kind of pink color, or it's fuchsia color, it means that the stock is really hot. Okay, and one thing I have to get in my brain is that it's not necessarily mean that this stock is hot for 1 second. It can mean, especially for a hot stock, that it's heating up. It's very hot, but it's just gonna continue to, like, it's basically the stock wants to rise. I think that's what I should think about. So when I see this kind of thing, stock wants to fall, and then it goes from like, it's like kind of, the color is like a desire level. Stock wants to rise, fall a bit. Stock wants to rise, fall a bit. It wants to fall, wants to rise a bit, wants to fall. It more so wants to fall. Now it wants to rise. So you're kind of, you want to get in when it wants to rise, and you want to get out when it wants to fall. Or you want to, like, I don't know, you can think of this in so many ways. But I'm going to leave it at that. I think I talked about that a lot. And then the last thing I'm going to talk about is this, the EMA lines. So basically, this stock is respecting this EMA 50 line. So it bounces off EMA 50, bounces off EMA 50, bounces off EMA 50, bounces off EMA 50, and then it bounces off some, like, probably EMA 25 or something like that. And then it falls through EMA 50, and then this is going to be kind of like sign of downtrend. And then it just like flies above EMA 50. Well, it starts bouncing off EMA 100, actually. Bounces off EMA 100, bounces off EMA 100. And it just flies. So wow, okay, that's very interesting too. Do I have any more data here? Okay, so it's telling me that there is support all over the place. This is my support and resistance indicator. And basically all it's telling me is there's support everywhere. Like, these green lines mean there's a lot of support. So it's saying there's support at 1.26. It says there's support at 1.58. So this is generally a really good sign of a uptrending stock. Let me just double check, because like it will change based on like what it knows so far. So it sees so far that there was support here, and then it sees so far that there was support here. That's kind of odd. I mean, it's not perfect, but I mean, it's an uptrending stock. So I could quickly look at another stock and compare this, but I don't really want to. I think that's pretty much it. That's pretty much it. So okay. Okay, yeah. So I would either, in conclusion, I would have either bought here or over here. I think I learned a lesson, and that is like, if I have seen in the long run that the stock has increasing support and even rising resistance, increasing support and resistance, then I'm okay with buying when the signals look risky. Okay, so I beat RSI here. Rate of change was a max here, made a new high over here, so I would have been okay to sell here. I would have been okay to sell here. And the only reason I'm telling you this, like right now, is because I can see that, like, so take a look at this. So you can see that rate of change is at its max here. It's made a new high, made a new high, made a new high, and then once it stops making a new high, then you can consider selling. So you can sell over here, because and then let's say you bought in again over, I would have bought in over here based on price weighted volume, because you can see that the volume drops, but then it starts to increase. So right over here is where I would have bought in at 2. And then you would have tried to sell, I would have tried to sell over here, because rate of change is no longer making new highs. And then I think I pay a lot of attention to RSI as well, because I would have spot divergence, bearish divergence, had I been staring at it. Okay, so that's a buy and a sell. And then this is a very interesting buy and a sell, because based on MACD, I wouldn't have wanted to buy here, to be honest. And the reason for buying here, one of the strongest reasons, is, I would say, volume. You can see that volume is falling, 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 starts to rise a bit, falling, and price. So volume and price, I should say, because price is showing us that there is some level of support here, and then volume is rising, so that's a great time to buy in, I think, right over here. Also, rate of change was positive too, just barely, but it was positive, like above 0. So, and then I would have tried to sell over here. There's 2 sell signals over here. I actually wouldn't have wanted to sell right there. Probably would have preferred to sell over here because of my high-low GAN indicator. Also, I'm trying to beat RSI, so RSI is 59 over here, and I got in at RSI 55, and it only goes up to 60. I mean, I could have held and tried to sell, and I think that's what I have shown, that I would have held and tried to beat RSI 50, whatever, and then it goes above, reaches 65, 70, and 75, and the RSI is a little less than, I'm sorry, the MACD is a little less than this. So if MACD was 74 over here, I would have accepted like RSI 70. So I'm trying to beat it, so it goes up to RSI 70. I would have sold it probably here or here. Or I could have just waited until this, but I don't like this. I find that the MACD is kind of slow, to be honest. Yeah, my MACD is pretty slow. I maybe have to figure out a way to show the resistance earlier. And I think the best way to find the resistance earliest is look at the price. you can see there's a resistance over here and there's resistance over here. But there's resistance over here as well. So again, this is a decent place to sell. And the RSI was 72 over there. And again, Mackie Hill's less than. Okay, I think I talked enough. This was a very, very long video. Hope you enjoyed it, and see you again soon.